Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. Welcome to Street Views, Monday, December 5th, 2022. Hope everybody had a good weekend. Enjoyed the football. College football certainly getting interesting. Futures down a bit this morning. Stocks fought back Friday after getting that hot jobs report. U.S. dollar down a little bit this morning. It was trying to make a run for the flat line last I checked. Seems like it might be getting a little bit into oversold territory. Wouldn't be surprised to see a little bit of a rally there in the next, call it a week or so. But we'll see what goes on there. And, the standout this morning is oil, WTI, crude and Brent, both up almost 3%. OPEC Plus met yesterday, as you probably know. No increase to rate cuts or what have you. They're just kind of going to stand pat. And the response is a bit of a lift. And we did have the EU announce price caps on Russia to the extent that that even is effective or works. We'll see. But nevertheless, you do have crude and Brent up a decent amount this morning. So, in speaking of energy in general, I would love to see a little bit more stability there. I want to add more exposure. Our preference for oil service and small cap E&Ps that are cheap. Well, just cheap E&Ps can be small. Small cap tends to have the more inefficiencies in it. But that's kind of, I would love to put a little more to work there. I think that's an area that can work going into 23. But they got to, the commodities have to stop going down, in my opinion. Stocks have held up really well. And maybe it is the stocks that are forecasting what's going to be going on as we head into 23 with China reopening and all that potentially. So let's go and look at some broad indices. You can see from the market here, we've got the S&P 500 up, SPY. I drew a trend line here going back to the highs. Let me see if I can get it a little bit. If we go a year out, yeah. So going back, really the high of the move was Jan 1, 2022, essentially. And you see us steadily have gone down, and each time we've met this line, we've sold off right there twice, very confidently sold off down to new lows. And here we are again. We broke above the 200-day, which is great, but many would argue this downtrend line is much more important than that 200-day. So we got to see what we do there. And this morning we're going to gap down a little bit. So we're going to be a little bit lower than where we closed on Friday, looking down about 70 bips right now. If we go over to semis, this is my crude attempt at a channel here, downtrend line with support on the bottom, looking like a trading channel. And it has closed above that, but struggling with the 200-day moving average, as you can see there. I put that up for cyclicality reasons. As you know, we think that semis are the most cyclical area of the market. So they tend to forecast a move ahead of any other group, which they have definitely tried to do here. We are not huge believers. We do think estimates have to come down quite a bit going into 23 for a lot of these names, given inventory, giving slowing end demands, giving pricing pressure. So not doing a ton, but definitely watching. We go over to the precious metal side of things on this weak dollar move. Silver is trying to leave the building here. This is the move in silver recently. Looks really good above that 200-day, above any kind of downtrend you want to draw. And you've got the 20-day moving average moving up pretty quick. We go over to gold. Let's take a look at that. We've got 200-day moving average right there. I did draw a downtrend. We've broken above the downtrend line pretty confidently in gold, and looking to see if we get confirmation about that 200-day in the near term. And One of the things that I would say, just given we're just at such, now we go to the S&P 500 here one more time. We're just at such important levels here in the market. Obviously, you own stocks. So if we break to the upside, that's wonderful. Near-term action could be quite exuberant. However, if we roll over, you're going to really wish you had some protection on. So to the extent that you have the ability to do so, I know we talked about this literally on Friday, but cover calls, downside put purchase, long vol, whatever it takes, I would definitely have some protection on in case this thing rolls over once again. And it certainly could. But that's it. Have an awesome Monday. Good luck out there. We'll talk to you tomorrow.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.